Good afternoon, everyone, and you're all very welcome to Monday's market preview for the week of the 6th of June. So Thursday and Friday, we had the Jubilee Bank holiday in the UK, which led to quite a significant reduction in trading volume right through the London sessions on both days. Now, broadly speaking, we do have bank holidays in the Eurozone today, in a multitude of different countries as well. Last Monday we had Memorial Day in the States, and of course on Thursday we had bank holiday also in China as well. So it left last week being fairly reduced in terms of the overall trading volume and I suppose ranges of interest that you would tend to normally see during the COVID period. Now this week, I suppose just kind of getting used to the price action kind of normalizing. The Monday after NFP does be fairly subdued, and we have seen that today where the markets have been fairly flat in a broader sense. Now, of course, looking at the bigger events this week, we have a range of high volatile focal points of interest this week. Okay, so today we have the no confidence vote in the UK Prime Minister Johnson after the widespread scandal associated to everything that kind of took place during lockdown and obviously in the back of the Subray report. Over the course of the week, we do have a range of other pieces of data right across the globe. So if we look at Tuesdays, we have an RBA meeting. On Thursday, we have an ECB. So central banks, again, continue to kind of update us on their reviews, kind of their current policy stance, and that will help to give kind of clarity to the markets. Now, between Tuesday and Friday, we have a range of other important pieces of information. So Europe, on Wednesday, we have GDP. We also have GDP in China. We have, on Tuesday, we have the PMIs coming out of Canada, with obviously factory orders in Germany as well. So there's quite a bit of key events kind of to keep an eye on through the course of the week. But of course, the real kind of important elements, as I said, is going to be the ECB on Thursday. Of course, looking at kind of a more updated guidance in terms of the ECB, in terms of when will they start to increase rates potentially. Obviously, previous statements have indicated that it will be towards kind of Q4. So we'll be looking to see, does that materialize as well, or is there kind of a more swifter forward guidance being presented by the ECB? And of course, Friday being the important day after the NFP that we had on Friday gone by, we do have CPIs on China and CPIs in the States as well. So I suppose firstly, from an Asian market perspective, all eyes directed towards the Chinese CPI figures, and of course the US CPI figures as well. So I suppose when we're looking at the US CPI figures, it's important to factor into conditions the prices excluding food and energy, and of course the prices including food and energy as well. So all of these figures all should be taken with importance. Of course, total year on year previous figures was around about 8.3. The consensus for CPI core, our CPI year on year is 8.2. So of course, anything above kind of 8.3, 8.4, 8.5% does of course present more bearish sentiment for the markets. And of course, higher than expected CPI figures means you're generally going to get a more risk off sentiment into markets. You're going to get a divergence out of probably the more riskier asset classes like your stock markets, like your cryptos as well, and other kind of more aggressive asset classes, and into your safer havens like your treasuries, like your dollar, as a risk-off maneuver in the market. So just worth keeping an eye on that. And of course, on Friday, we do have unemployment figures in Canada, and we do also have the Michigan Consumer Sentiment Index as well, which is a fairly good sentiment index in terms of realized expectations within the economy as well. So we're keeping an eye on that one as well. So that's the economic calendar. If we look at the price action again, as we alluded to, price action on the Dow Jones starting off has been fairly consolidated from that initial high of the kind of 33,500 level on the 30th of May. So since the month end, beginning of June last week, the price action has been fairly much back and forth between, I suppose, this 32,500, 600 level and of course this 33 kind of 500 level as well. Now we have a key daily level of interest worth keeping an eye on around about this 33,200 level. Over here we can kind of see it been tested and rejected multiple times. Now last week the price action did try and break through a multitude of times, but has failed each time. So again, worth keeping an eye on the price action to the early parts of this week to see can the price action sustain itself above this region to allow more elongated upside move. So we could well see kind of early buy-in in the week, but that could very easily fail into the CPI figures on Friday. So it's just important to factor that into consideration as well. On the S&Ps, meanwhile, the price action has continued to bounce very, very quickly. So if we look at the higher time frames again, fairly consistent consolidation last week after, as I said, with a multitude of bank holidays. Now, if you were to take the kind of the medium-term outlook since I suppose those end of March highs, fairly significant selling, kind of multitude of phases of declines, and we've seen that pop back in the equities, a little bit of a pullback. So at this moment in time, we are holding above the kind of 4100 level, and we've got an area of interest that we kind of talked about or looked at last week. And of course, price action now is trying to kind of break through these shorter term highs here and kind of push through. But as we speak at the minute, we have higher lows. We've got a higher low here and a higher low here, but we do also have a lower high here. So this basically is illustrating the price action at the moment is in a kind of a larger consolidation structure, and we would need to see kind of a clearer bias to see can the price action come up to these regions up here, or maybe even potentially up here, or if these areas of interest kind of short-term highs fail, the price action could become even more consolidated between this area of interest between kind of 4100 and 4200 as a result. So that's kind of your range of interest for the week. Of course, on the NASDAQ, a little bit more elongated as well. So NASDAQ, if you look at the daily, very, very significant selling over the last number of weeks as well. You only have to look at the kind of the previous highs up here. This was the all-time highs. Then we had that next phase of elongated rally, and then we've sold off since then. Since then, though, the price action over the last week or so fairly consolidated, but holding this 13,000 level here. So these kind of short-term highs from last May, and of course the March lows, and of course this considerational range here from the beginning of May is where the price action is currently holding underneath. So 13,000, kind of 13,100 back to as far as 12,900 has been the peak highs for the last week or so into the end of May, and of course obviously the early parts of June. So I suppose from a short-term perspective, we would like to see this area of interest being taken out to allow more elongated upside move higher, but we do have some areas of interest, particularly on the daily here around this zone, and we do also have ranges of interest here just underneath the 15,000 level as well. All right. If we fast forward then to the indices and gold, just to finish, price action on the gold first and foremost is still being fairly consolidated. So we had that pullback last week, didn't quite get to this level of interest between 1850, 1820. We did kind of rally from just sub 1830. Price action has moved all the way back into this 1870 level, and since then the price action has pulled back into this previous consolidation. So between the inversion in the yields, the correlation in the yields has definitely affected the movements in gold, because we've taken out new lows and we've also taken out new highs. So it's very indecision at the minute, showing that there is a lot of volatility in the gold prices at the moment, and off the back of the currency, off the back of the commodity markets as well. If we look at the DXY, just to finish, DXY structurally on the weekly has come back into this 102 level, had flagged lower into this negative flag structure. We had broken structure to the upside as far as 102.75. We have come back down to try and clear out this short-term buy-side imbalance, and now we're kind of holding around 102. So if you're looking for a bullish DXY and bullish dollar, we need to see this short-term area of interest broken to allow a more elongated pullback to the upside to kind of 103, 103.50, this region up here, maybe even just to shy 104. But as we speak at the minute, there is the potential for this to be kind of a short-term consolidation. Potentially, if the indices get that another bump higher through the range, we should see the dollar weaken and more downside as well. So using the correlation metrics between the indices and the dollar is always a safe play to gather kind of a more steady viewpoint on market sentiment, particularly on the daily basis and between trading sessions as well. So that's pretty much it for our weekly preview. Of course, our competition for June is starting this evening on the new brokerage. So of course, if you're interested in joining the competition, there's a number of prizes and spot prizes. So free valuation challenges is up for grabs, 100,000, 50,000, etc. So definitely, if you're interested in joining the funded program, this is a surefire way to kind of begin that program by potentially becoming one of our winners. So as I said, that's starting this evening. So if you are interested in that, please do get in touch, and we can get the access set up for you today as well. So that's pretty much it for the week. We will be back on Friday, just I suppose recapping some of the events, so particularly the ECB, the RBA again, which will be very, very early tomorrow morning, and of course some of these other important pieces of economic data as well. Now, of course, from a fundamental perspective, we will be keeping an eye on the updates from a price action perspective regarding the no confidence vote today in the UK. So that could be a particularly a market mover, particularly for the pound and also the FTSE, the UK 100 or FTSE index as well. So keep an eye on those if you're trading the London-based trading session as well. All right, have a great week, everyone, and we'll see you all on Friday.